Well, hello members, here we are. Been a while since I've done an update on the cradle-to-grave series. I'm going to start, there's four more tracking, GDX, GLD, VRX, and KMI. So, of course we have some others in the portfolio. Some of those are doing pretty good. We've had a couple stops outs, but in general, we've had a good run and we continue to have good runs. Now, the last time we talked about GDX, we were on this bar. We were getting ready for a breakout. We did get the breakout across the multiple time frames. We saw it here. We saw it also on the weekly chart. I'll pull that one over here real quick. You can see that breakout here. And so those breakouts say that you should get 2 to 3 bars to the upside. That's exactly what we've gotten, right? So since we've last done this update, this was the breakout. There's the 2 bars extension. It is dojis on both. It's struggling to get higher. You got the Fed this week, so that's part of what's going on. But essentially, we got exactly what we wanted. We were able to catch a retrace buy and then flip it. And, it's probably time to be taking some more profits up here. So we'll look at Monday and Tuesday in front of the Fed, see if there's a place to take some profits in this area. And then what are you going to do, right? You're going to look for a pullback. The first retest region is back down in this area. It's already done it once, did a slight retrace on this particular bar. That was where we bought it as it came back in. And so what we're looking for now is a second retrace back to that area. Now, on the weekly time frame, that would be the first trip back. That previous swing point high, there's actually 2 of them. You've got one here and you've got another one there. I'll draw in the top one first, and that's the area there. If I get rid of this one here, you'll be able to see it. Let's do it again. There we go. And so that retrace is going to be in this area, and that's where you want to try to buy again, most likely. And so you want to sell up here if you can, take off some of it, right, and then get the retrace, buy back in, and keep working this to the upside. On a long-term basis, just to give more perspective, gold looks like it's really starting to turn, right? And if it really is starting to turn, if this really is a big kind of bottoming process that's starting to take place, this is the sort of trade that you can trade for a very long time. And so if this rounding bottom's taking place, if we get the breakout on the monthly, which right now it's holding that breakout, then you're going to probably have enough data to know that in fact it's real. And so this is going to be a trade that over time can continue to work its way higher all the way back into the swing point low. And that's a long way up to get there. So it's going to be a trade we probably continue to monitor and trade for a long period of time. Now, part of this is gold itself. I'm going to pull up the GLD chart. And if we look at gold itself, and not nearly as bullish as what you're seeing in the miners. Now, the miners, you have to realize, those miners had overshot to the downside, so they're playing catch-up. It's one of the reasons you see that chart as bullish as it is compared to gold. But unless gold breaks out at some point up here, right, and starts legging to the top side, those miners are not going to be able to continue. So gold itself is going to be a big tell here at some point. Now, if you followed me along, when we made this big run back here, and I had talked about this big run and the way that it had set up as being one of those cases where more than likely we were going to see a range build out, and that range could actually be to the top or even the bottom potentially of this bar. It has into the top of the breakout bar, right, the big spike bar here. It has in fact done that. It hasn't came all the way back into that area that it could. It still may, right? I mean, it still could come back into this particular bar here. So far, it got right to the top of that bar, but not to the bottom of it. Gold shot up again last week. That was part of what pushed the GDX up higher. Got up, got to the top of the range, starts to give it up again. So now the question, as has been each time this has happened, is how far will it retrace? If it retraces down into the full second level here, that would be down in this level. As you can see now, it's testing in there. Again, the pushes up have more volume, those down have less. That's the sort of thing you want to see. And so we're seeing exactly what you'd like to see if you're bullish on gold, and that is that strength keeps coming up to the top side and it's not on the downside. If it does get into the bottom of this range, it can get into the second lower range here. It can get to the bottom, And if it really did correct hard, you potentially could pull back a third level into this big bar here, the bottom of it, the gap up area. So that's the way gold is set up. Gold's still range trading. At some point, the expectation is that this will break out of this range and start to head higher again. When it does, this and the GDX both are probably going to give you some good returns. So again, we just keep trading them. Some of the other stocks we are looking at, KMI is another one. Now KMI actually had earnings. We had talked about the Doha report and how that might affect it. That was when we last spoke. It didn't affect oil itself. What affected this was earnings, and earnings came in here. No huge push in volume, but it did fall back in. It had reached the top of the range. You had two swing point highs up here. That would have been a nice breakout had it got over it on that test. It got over one of them, fell back, unable to get over the other, and so you didn't get the multiple swing point breakout. Instead, you still have the range. The range has been in effect for quite a while, is still in effect. You're about halfway in it, so there's really nothing to do here. The buys are back down here at the lows. The buys are also at the breakouts. The expectation is that eventually this thing will continue higher. If you look at some of the others in the group, they're doing well as well. So, you know, this is one of those trades that we just have to continue to let it develop, look to add on some weakness or potentially on the breakout. Okay, and to wrap it up here, the last stock is VRX. Now, last time we talked about VRX, we were talking about trying to buy the retrace. That retrace did take place. The area we were talking about was the swing point high and retracing back into that area. On that day, the 11th here, it did retrace. That was when we last did the show. We did buy into that retrace. Came back with lighter volume than what was in this high of the swing point low. It was also in this big thrust up bar here, and so we took a chance, bought some, were able to flip it, make some money on it, and now holding the rest again as it pushes higher. Where's it going to try to go? It's going to go test that swing point high. If it gets over it, right, the eventual test is all the way back up here. So again, we keep taking profits on spikes. We keep trying to buy retraces. This could take a long time to build out. You can already see you've kind of got two ranges starting to form right about there, and you've got another one just above it about there. And so those two ranges, right, they could go for a while. You want to keep selling on pushes into this one, buying on retraces into that one, and if it does come back here one more time, you have to be prepared to buy it again. So for now, VRX, our target's way up here eventually, but you keep trading it back and forth, and it's volatile enough to make some good money on the way. Until the next time, that's the 4 trades we're watching, and of course there's others, but once we lighten up our load here in terms of the 4, maybe we can pick up another one to watch. That's it. Thanks. Bye.